We have recently turned quite defensive, and today we're going to try to understand what kind of scenario could actually unfold over the next few weeks. We will be using our FinGraphs platform, and first starting with the Euro-US dollar investor's view, or a combination of a weekly, daily and hourly graph. What we can see is that over the long term, the correction up on the euro since early 2017, late 2016, has probably come to an end, and the trend is now rolling over to the downside again. On the daily, we are now in a downtrend, and we believe that this first leg down could probably extend into late August, September, towards the 114, 111 range. Shorter term, we're still in a counter trend, and that counter trend is not quite over yet. It was quite oversold about 10 days ago, and we believe it could probably make it up back above 118, which would be the high of this full counter trend move, and before it resumes lower, possibly from the second, third week of August into late August, September, as we could see on the daily graph. Now, we believe that this counter-trend bounce on the euro may be concomitant with counter-trend bounce on Brent. What we can see is that Brent is still in an uptrend on the weekly, but we believe that uptrend is coming towards an important intermediate top. It's almost overbought here, and our daily graph has started to turn down. It was overbought in May, made a high, and retested that high at the end of June, but didn't quite make it above those levels. Now it has corrected down quite aggressively in July and has seen a slight counter trend up that we can see here on the hourly, which may last another week or so and bring it up towards the 76, 77 level. But following that, we believe that Brent is going to go test the bottom end of our corrective range towards the 66, 67 level. And if that support does break, then the next targets are in the 60s or possibly down to 55. So we believe that Brent probably has quite a bit of risk during the second half of the year, and the risk of an intermediate but quite strong correction. Now, at the same time, we also look at inflation expectations with the break-evens. So this is the inflation-protected TIP ETF versus Treasuries. And when the ratio actually moves up, that means people are buying more inflation protection or inflation-protected bonds than Treasuries. So they're actually scared of inflation and buying more of these inflation-protected bonds. And we can see here that we're still in an uptrend on the weekly graph, but also here we're getting quite overbought. And we believe that we could see an inflection point and a substantial counter trend developing over the second half of this year. Now, the graph here is very similar to what we have seen on Brent. It has been moving down since May, and we believe that following the slight counter trend that we currently have, we should be moving lower to test the lower end of our corrective targets here during the month of August, and possibly moving below them. Now, this slight counter trend is probably not quite over yet, and we would probably leave it another few days, perhaps a week, and it could move up slightly more. So we have the euro in a counter trend, we have Brent in a counter trend, we have break-evens in a counter trend up, and they should all continue possibly another few days before they all resume lower and start breaking down during possibly the second half of August and early September. Now, these inflation-linked or related instruments moving up is probably not very good for big growth stocks versus the market. And we look here at the QQQ Nasdaq 100 ETF versus the Spider ETF, and we can see that the ratio would still have some impulsive to extended potential on our weekly graphs, but is now very overbought and could be very near to an inflection point, which we could also see here on the daily. We're very close to the overbought zone and have reached our targets, and is probably already starting to reverse in on the hourly. So this slight inflation acceleration counter trend over the next few days, week, is triggering quite a strong sell-off in the tech sector. And the tech sector is a huge influence on the rest of the market. It's in every ETF, it's a large portion of most of the major indexes. And we believe that this tech sell-off, which may have started mid last week, could see some contagion into the wider market. And if we look at the S&P, in our view, it looks quite vulnerable. On the weekly graph, it has reached our impulsive targets up and is almost overbought. On our daily graph, it may have a bit more to go, but we could also see our envelopes here touching each other already. And it does look like some kind of a retest of the January highs, and it may not make it slightly above. It may just attempt to retest and start to reverse down over the next week or so. And this is what the Orly is telling us, that after the nice move up that we saw during July, we've come to a point where the Orly is overbought and has reached its targets. And it could be the beginning of a reversal down that, in our view, could be quite substantial during the month of August. Finally, to confirm this, we look at defensive sectors and the Staples ETF versus the S&P 500 ETF. And we can see that it, after 2 years of reflation, is now very much oversold and has reached its targets. And the daily is already starting to move up from an oversold position and could come and test the resistance of its corrective targets and possibly start to accelerate above these. And the hourly graph is nicely oversold, or was nicely oversold early last week, and is now in an uptrend with upside targets which are quite promising. So in our view, the tip of this market could be a slight inflationary pressure that brings down the big tech stocks, that contaminates the rest of the market, and defensive sectors will start to outperform. And we believe that it could materialize during the month of August. Thank you very much. Have a good day.